The stock market from 2022 has been marked as having one of the toughest years in nearly a century, making 2022's equities the worst year since the global financial crisis in 2008. A vicious combination of contradictory policy, volatility, and inflation at 40-year highs erased a whopping $14 trillion of wealth from the global stock markets. Talks of a US recession in early March 2023 is littered all over the headlines. And for the majority of the year, most of us just saw a sea of red in our portfolios. But as Sir Isaac Newton once said, what goes down must come up, or something like that. In the long term, the overall stock market will go up and therefore will eventually recover. And I'm glad to see that the first month of 2023 has been really good for our portfolios, with the S&P 500 up by 8.6%, the JSE Top 40 up by 6.4%, and Bitcoin up by a whopping 41.4%. And seeing that it is a new year, I made some exciting new additions to my own portfolio, which I will be sharing with you guys today. So buckle up and let's get started. So for the month of January 2023, I invested a total of 10,000 Rand, which was split up between 1,000 Rand into local individual stocks, 2,000 Rand into offshore individual stocks, 2,500 Rand into my passively managed tax-free savings account, 1,000 Rand into my passively managed retirement annuity, 500 Rand into property, 500 Rand into my actively managed tax-free savings account, 500 Rand into my actively managed retirement annuity, and 2,000 Rand into crypto. My individual local shares portfolio currently has a value of 16,686 Rand with a profit of 13.4% or 1,860 Rand. I currently own 17 local shares, including African Rainbow Capital, Aspen, British American Tobacco, Capitec, Richmond, Discovery, MTN, Naspers, Northern Platinum, Process, Purple Group, Sasol, Shoprite, Sygnia Stillwater, Standard Bank, Spar, and Transaction Capital. So far, my best performing stock is Naspers with a profit of 84.8%, and my worst performing stock is Purple Group with a loss of 28.3%. Now I follow a rather simple investment strategy with my individual stocks, whereby I try to invest into those who are currently the most undervalued by making use of the website called Simply Wall Street. So this month it was British American Tobacco, which was 50.2% undervalued, MTN, which was 62.5% undervalued, and Sygnia Stillwater, which was 43.4% undervalued. I also added two more local stocks to my portfolio, Renergen and Sun International. Renergen is a local renewable energy producer which has been on my radar for quite some time now. They recently announced that they finally started producing helium, and based on their projections, they should be able to produce between 5 and 8% of the world's helium by 2026. This is a bit of a wild card for me, but given its popularity amongst investors and great future prospects, I'm willing to put my bet on them. Sun International is currently trading at a massive discount of 82.7%, and given the fact that the South African tourism industry is slowly making a recovery from the Corona times, it seems like a great entry point for me. So I invested a total of 200 Rand into each one of these 5 stocks this month. In my individual offshore shares portfolio, my current value is $3,943 with a loss of 2% or $77. I currently own 9 individual US stocks, namely Alphabet, Amazon, Apple, Berkshire Hathaway, Meta, Microsoft, Nvidia, Tesla, and Visa, as well as 2 ETFs, namely the Vanguard S&P 500 and the Vanguard FTSE Emerging Markets ETFs. My best performing US individual stock so far is Nvidia with a profit of 31%, and my worst performing stock is Tesla with a loss of 13.5%. Many of these growth tech stocks got slaughtered last year, but for the most part, they have all been trading at massive discounts in 2022, which I pounced on like a hungry lion, and it seems to finally be starting to pay off.
Nice.
Now I follow the exact same strategy here as with my local individual stocks, and therefore I found that Alphabet is still undervalued by 33.5% and Amazon by 44.7%. Most of the other stocks on my portfolio have recovered, so I set out to find new opportunities in the market and therefore decided to add 2 new ETFs to my offshore portfolio, the iShares Global Healthcare ETF and the iShares MSCI China ETF. Healthcare has been around since the ancient times and is the one sector that can survive even plagues and pestilence. And as technology advances, people will be able to get much older in the future, so I believe that investing in the innovations within healthcare is a recession-proof investment with high potential growth. And if you look at some of the largest healthcare companies in the world, most of them are currently trading at great discounts, including United Health at 34.1%, Merck at 41.3%, Johnson & Johnson at 14.1%, AbbVie at 40.1%, Roche at 45.4%, and Pfizer at 39.7%. Now, in order to prevent my stock portfolio from getting too big and clumsy, I decided to just invest in the best ETF that I could find, which tracks all of these healthcare companies. And then there's China, on which I can probably make a whole video about. Their economy suffered quite a lot last year at the hand of their property crisis and zero COVID policies, but since they recently relaxed their stringent policies, the Chinese economy has opened up again, which improves China's growth outlook for 2023. Many of the Chinese stocks posted their best start to the year on record, and looking at the past performance, I still believe that there is some great upside potential for China and emerging markets in general in 2023. So I therefore invested $28 into Alphabet, Amazon, iShares MSCI China, and iShares Global Healthcare ETFs this past month. In my passively managed tax-free savings account, my current portfolio value is 52,956 Rand with a profit of 8% or 3,716 Rand. I only own 4 ETFs within my tax-free savings account: the Cautious Total World, the Satrix Top 40, the Satrix Property, and the Sygnia Global Property ETFs. My best performing ETF so far is the Satrix Top 40 with a profit of 17.1%, and my worst performing ETF is the Satrix Property ETF with a loss of 6.2%. My investment strategy with my tax-free savings account is to allocate 40% to offshore shares, 40% to local shares, 10% to offshore property, and 10% to local property by making use of these 4 ETFs. So far, my tax-free savings account allocation is 37.9% offshore shares, 39.6% local shares, 9.4% offshore property, and 13.1% local property. I therefore invested 2,000 Rand into the offshore shares portion by using the Cautious Total World ETF, and 500 Rand into the offshore property portion by using the Sygnia Global Property ETF. This brought my tax-free savings account allocation to 39.8% offshore shares, 37.7% local shares, 9.9% offshore property, and 12.6% local property. Slowly but surely getting there. My properties portfolio currently has a value of 3,532 Rand with a profit of 4.7% or 147 Rand. I currently own 7 properties, including the Reed, Capital on Bath, Black Brick Santon 2, the Fynbos, the Duke, 1 on Anne, and 6 on N. I still have 1 pending investment, the Edge, in which I invested another 500 Rand this month. The Edge has an estimated net rental yield of 6.8% and an internal rate of return of 10.6%. Then I have my 1 passively managed retirement annuity invested in the Sygnia Skeleton Balanced 70 Fund on the Sygnia Alchemy platform, which has a current value of 34,049 Rand with a loss of 0.15% or 51 Rand. I have a monthly debit order of 500 Rand which gets automatically invested in this RA, and when I have some extra cash, I will also make some lump sum contributions to it. Then I've alluded to opening up another passively managed retirement annuity with 10x investments in my previous update videos. So today I'm going to reveal what that investment is. I opened a 10x Your Future Retirement Annuity Fund on the 22nd of November 2022, which has a current value of 13,718 Rand with a profit of 6.5% or 797 Rand. Similarly to my Sygnia RA, I have a monthly debit order of 500 Rand, and then I also make lump sum contributions when I have extra cash. Now, the reason why I have 2 passively managed retirement annuities alongside my 1 actively managed retirement annuity with PPS is because I want to further diversify my investments, specifically between different investment platforms. The retirement investment industry has been a dark and crooked space in the past, with many insurance companies charging ridiculous fees to their customers and some financial advisors selling absolute trash to their clients just so they can get some juicy commissions. This is slowly changing for the better, with passive retirement annuity companies like Sygnia and 10x popping up, offering great products at much lower fees. And if you don't know what I'm talking about and you have an RA, then please go and watch this video. It is 30 minutes long, but it will likely save you hundreds and thousands of rands over the long term. Now, although the 1.19% EAC from my 10x RA is higher than the 0.52% EAC from my Sygnia RA, it is still lower than the 2.42% EAC from my actively managed RA with PPS and much lower than the industry standard of 3%. And just to quickly show you why fees are so important, especially with long-term investments like retirement funds, a difference in only 2% in fees could mean 40% less money in retirement, which in this example from 10x could cost you 1.9 million rand after 40 years. Again, go and watch this video to understand how this works. Now, if you already have an RA with another platform that is killing you with fees and you want to earn a juicy 250 Rand take a lot voucher, then all you need is to do an obligation-free cost comparison with 10x, but it needs to go through a referral. So if you're interested, then gooi me an email at moneymarks101@gmail.com with your name, surname, email and cell phone number so that I can send you your referral. Then with my offshore ETF portfolio, which I have with Interactive Brokers, my current portfolio value is $2,573 with a loss of 7.4%. 100% of this portfolio is invested in the VWRA ETF, which is an Irish domiciled ETF which tracks the whole world's economy. This portfolio is slowly recovering from the market crash of 2022, and I occasionally also make some lump sum contributions to it, but it is not my main priority right now. Then moving on to my crypto portfolio, I have 9,712 Rand invested in the top 10 bundle from Revex, which is finally at a profit of 2.1% or 199 Rand again. I also have 9,739 Rand invested with easycrypto.co.za, which is currently at a profit of 23.3% or 1,740 Rand. This is split up between the EC10 and the ECA20 bundles. Then I also own some individual crypto coins in my Exodus software wallet, including 11,056 Rand in Bitcoin, 4,204 Rand in Ethereum, and 326 Rand in Dogecoin. It was a brutal year for the crypto market in 2022, alongside many other growth tech stocks, but as I kept on repeating like a broken record player, the market will recover and go up again. And here we are. I truly believe in the future of blockchain technology and will therefore continue to invest in cryptocurrencies through the highs and the lows. I therefore invested another 500 Rand into the top 10 bundle from Revex, 250 Rand into the EC10 and ECA20 bundles from easycrypto.co.za, and then I also use the auto buy function from easycrypto.com to buy 500 Rand worth of Bitcoin and Ethereum, which I then automatically transfer to my Exodus software wallet. Guys, I am so passionate about educating others about the exciting world of blockchain technology and cryptocurrencies, so much so that I partnered up with easycrypto.com to create an entire crypto educational course that you guys can go watch for free. This course contains over 2 hours of video content spanned over 16 lessons, and I am confident that after watching this course, you should have a decent understanding of what crypto and blockchain technology really is, how to craft the perfect crypto investment strategy, where to buy and store crypto safely in South Africa, and how to navigate crypto market crashes. I will leave the link to the course down in the description, and if you are done watching it, please let me know what you think. I would really appreciate your feedback. Okay, lekker. So this brings my total passive investment portfolio at the end of January 2023 to a value of 266,785 Rand, which is split up between 66.7% broad market ETFs and unit trusts, 18.9% individual shares, 1.3% property, and 13.1% crypto. My ideal allocation would be 70% broad market funds, 15% individual shares, and 15% crypto. So I am fairly happy with how things currently stand. But again, This is just based on my own risk tolerance and long investment time horizon, so it may not work for everyone. But what do you think about my allocations? Let me know down in the comments. Okay, dankie, bye!